We're entering such a crazy period of time when perhaps we're on the cusp of even major governments going bankrupt, even in the Western world. So I can't guarantee that investing only in Western companies which operate in the US or Canada, it's going to eliminate the political risk entirely. I'm not sure that that is even the
Sure.
case. Like you never know if the government of Canada, which doesn't have any gold reserves,
Reserves.
just suppose they decide to nationalize the mines or levy a huge tax on those mines, which is, almost the same as nationalizing them.
Sure, absolutely. And that is a good example. Yeah, they don't even have 1 ounce of gold. It's pretty insane.
Yeah, I think pretty much each and every one of us can say with pride that they own more gold than the government of Canada.
Yes, that's right. Silver and gold have both performed very well over the last year. Silver is up about 39%, and gold is up about 42% when looking back at last September. Mining stocks have been getting a lot of attention recently because they have started breaking out as well. In this video, which is not financial advice, we will look at the potential for mining stocks and the risks associated with them. Something that precious metals investors like about the physical metals is their lack of counterparty risk. Oren, is counterparty risk a valid concern for people who are considering investing in miners? And have you ever heard of a mining company that wasn't honest about its estimated profits from a mining project?
Yeah, so it's very important to make it clear to everyone listening that investing in bullion and investing in mining companies is an entirely different business. When you're buying bullion, when you're holding physical gold and silver, you're reducing your risk. When you're buying a mining company, you are increasing your risk. And look, my purpose as an analyst to begin with was to tell people to reduce the amount of risk that they're taking because I think that markets are, extremely overbought, over leveraged, and I wanted people to get ready for, the big crisis which will come eventually. And so I think that everyone should have a sizable position in physical gold and silver before they even consider investing in mining stocks. But for those of us who already have a position, for those of us who are willing to take on a bit more risk, who want some leverage on top of our position in bullion, they can explore this field of the mining equities and as for your other question, so I wanted to start by telling you a story. So in 1993, there was a small Canadian mining company called Bre-X, which acquired a plot of land in the jungles of Borneo along the banks of the Busang River. So
Sounds very exotic.
yeah, that's a very remote location. So 2 years later, it published estimates that the site contained 30 million ounces of gold. And at first, this generated interest and enthusiasm among the public, and their stock started rising. At first, it was traded for pennies, and it started rising and rising, and it reached 286 Canadian dollars at the top. So
Wow.
this was like an amazing rally. And it gave the company a market cap of no less than $4.4 billion US, which, of course, at the time in the 90s was a huge amount of money. And due to the scale of the discovery, the ruler of Indonesia at the time, President Suharto, he intervened. He wanted a large company to step in and, manage the mining operations. So in order to placate him, the managers of Bre-X, they reached an agreement with a large company, Freeport McMoran, so that they would manage the operations. And also, of course, Suharto himself and his cronies demanded their cut, so they promised them a cut of the future earnings. But it turned out that this was all a hoax because in 1997, after Freeport McMoran started doing their own due diligence, started doing their own drills, and they found no gold in
Oh
their own
no.
cores. And it turned out that the chief geologist at the site, who was called Michael de Guzman, he probably faked the results of those core samples. What he did, he drilled core samples all across the site and he salted them with gold. He added tiny amounts of gold flakes to the samples. So when analyzing them, they would register as having a high amount of gold, and this
Wow.
created, yes, and probably even the manager, even the Canadian managers of the company, they were fooled themselves. He's probably the guy who was behind this entire fraud. Now, the story becomes more and more crazy because this guy, when he realized that they were onto him, he faked his own death.
That's
Probably,
crazy. And that's
probably,
really interesting that one guy was able to mislead everyone in
yeah,
regards to this situation. One
because
bad actor.
he was in charge of the operations at the site. Everyone else answered to him. He was the one who analyzed the results, and he was, had access in order to tamper with those cores. And he, as though, committed suicide by jumping off a flying helicopter. But
That's interesting.
yeah, but that's probably not the true story. He probably faked his own death and ran away with millions because he had stock options and he just cashed out and disappeared.
I
And
see.
yeah, of course, the price of the stock collapsed and many investors were heartbroken, lost all their money. And that to this day, this is considered the greatest fraud in the history of the mining industry. But it is certainly not the only one. There were many such stories, and this is an industry which is somewhat problematic.
That's
Okay,
interesting. So that's a great example of, yes, people should be a little concerned about the counterparty risk associated with the mining stocks. A lot of
there
times
is a
investors,
saying. There's a saying which
uh,
is attributed to no other than Mark Twain, which is a gold mine. The definition of a gold mine is a hole in the ground with a liar standing next to it.
that seems like an appropriate warning. So yeah, be cautious, folks.
And Mark Twain, he knew because he used to, as a young man, he used to work in mining.
Yeah, so he knew that some shady personalities might end up being associated with these projects. Now, it does take a long time to get a mine up and running. What are some of the challenges associated with that? And would you say mining is a good business?
First, I want to say, what we've said about, fraud in this mining industry. Well, I'm guessing that the large companies, the leading companies, are okay. They're fine. You'll probably find more fraud and shady business with the tiny companies. But some investors are interested in the tiny companies because there you have the highest potential for returns. There you can have amazing stories of a mine which was, trading for pennies, and overnight they get great results and it can jump by, a factor of 10. You can have 10 baggers, 20 baggers, and you have people who, made a lot of money by trading those mining stocks. But in order to do that, you really, really have to know what you're doing. You can't just waltz into this industry and just pick a random company and be sure that this is the one, because out of, I don't know, a dozen companies, perhaps one will succeed. And that brings me to your question about the mining industry as a whole. I say that mining is a terrible business. Why is mining a
Okay.
terrible business? Because, well, first of all, gold and silver, they're very scarce. There's just a tiny amount of gold and silver in the ground. And in order to find them, well, first of all, you need to have a geologist who has this theory as to where you may find gold and silver. And it's not an accurate science. They make mistakes here and there. So you need to go to the site. Sometimes it's a very remote location. There's hardly any infrastructure there, and you need to start drilling hundreds of holes in the ground and extract those core samples and analyze them. And if you're lucky, then you find enough gold or silver in an amount which justifies extracting them. But this is just the beginning of the process, because even if you have this discovery, then you need to go through this very long process of getting permits and raising capital. And then you start constructing the mines, and it takes years and years until you actually get to pour your first gold or silver and bring them to the market. So the construction of a gold mine is a very long and tedious process. It takes
Years.
unusual people. It takes an unusual manager, an unusual CEO to lead such a project through those, years and years of developing a mine. And you need someone who has a lot of patience and a lot of determination to get to the ending point.
Yeah, they need to be pretty tenacious and have a lot of stick-to-itiveness to see these things through.
Yes.
Well, what other risks are there to consider with mining companies besides lying like the situation we had with Bre-X?
Yes, so there's a very long list of risks which are associated with the mining industry. Now, the reason I'm going through all this is because, for people who are first entering this field, I want them to be aware of all the risks which are involved and,
Sure.
be aware of what they're getting themselves into. So I'd say that first there's what I call the geological risk. The amount of gold and silver in the ground, as we said, is tiny. And companies, in order to keep operating, they need to constantly search more ore. And whatever they extract, they need to replace so that they have reserves, adequate reserves to keep the company going with the same degree or higher degree of profitability. So just a small example that I have for you, just a small piece of data. They say that between 2005 and 2020, the average ore grade for silver fell from 13 grams per ton to around 6 grams per ton. Obviously, as
So
we
more than cut in half.
yeah, as we extract more and more precious metals from the ground, then good ore is becoming more and more scarce, and the average amount of gold in that ore is falling. So in order to continue operations, you constantly need to drill, you constantly need to look for more gold and silver, and sometimes you need to purchase exploration companies which were successful. So you get those what we call mergers and acquisitions. And sometimes a mining company will need to open its pocket and buy a smaller company so that it can continue operating. And it's very good for the owners of the small companies. It's less good for the owners of the large company, which needs to take a large chunk of its earnings and use them to buy smaller companies.
That is interesting.
Yeah, so that's one of the risks that you have, because if you are unable to replace those reserves that you're constantly using up, then your company will eventually go bankrupt.
And when you're having to go through multiple tons of material just to get 1 ounce, that probably is a pretty nerve-wracking situation for these companies to be in.
Yes, of course. Now, it is true that as gold and silver are becoming more scarce, then those reserves that you already have, they become more valuable. And
Absolutely.
now, another major risk is political risk. Now, many of those mining companies, they operate in remote areas of the world, in third world countries in which the regime is either unstable or unreliable. We gave the example of, Indonesia when the ruler suddenly wanted a cut of the profits. This can happen. A government can decide to nationalize the mine, for instance, just confiscate that mine, or a war can break out. You can have civil unrest, and this can completely disrupt and derail your mining operations.
So that's a significant risk. I guess a good way to kind of hedge against that is if you go with a company that has operations on like multiple continents, for example.
Yes. Look, there are investors who, for instance, don't want to deal with mining companies who are operating in third world countries, and they prefer Western jurisdictions such as the US, Canada, Mexico, which are, relatively stable, relatively reliable. But, we're entering such a crazy period of time when perhaps we're on the cusp of even major governments going bankrupt, even in the Western world. So I can't guarantee that investing only in Western companies which operate in the US or Canada, it's going to eliminate the political risk entirely. I'm not sure that that is even the
Sure.
case. Like you never know if the government of Canada, which doesn't have any gold reserves,
Reserves.
they don't have any gold reserves right now. Just suppose they decide to nationalize the mines or levy a huge tax on those mines, which is, almost the same as nationalizing them.
Sure, absolutely. And that is a good example. Yeah, they don't even have 1 ounce of gold. It's pretty insane.
Yeah, I think pretty much each and every one of us can say with pride that they own more gold than the government of Canada.
Yes, that's right.
So the next kind of risk that I want to mention is the regulatory risk. So even in countries where the government is stable, you still have problems with the regulators. For instance, you can encounter red tape, and the permitting process can be delayed for years, for instance, due to environmental concerns, and they may demand that you conduct all sorts of costly environmental studies to prove that your operations won't destroy the
The
environment.
rare fish species or something.
Yeah, stuff like that. Another problem with the regulator is the fact that mining companies often use a lot of water. So they need access to water, for instance, for wash plants, and there are limitations on water usage. So there's an entire list of things that can happen, when a mining company is dealing with regulators, even in Western countries, even in the US or Canada. As a matter of fact, in those countries, the environmental demands are even more stringent than in third world countries.
Right, absolutely.
I remember I once had an argument with an environmental scientist, and she was so negative on the entire idea of a mining industry. She had this prejudice. She was prejudiced against the mining industry, thinking that it's a terrible business that needs to be shut down entirely. And then I started explaining to her, hey, you think that we should transition to electricity, right? Renewable energies, right?
Uh-huh.
Do you even realize that in order to do that transition, we need a lot of gold, silver, and copper? Do you even realize the amount of silver that you need in order to construct enough solar panel to transition to renewable energies? And
Absolutely.
she was completely oblivious that you need raw materials in order to conduct that energetic transition that she's banking on, she's advocating for, but she was completely unaware that you need silver in order to perform that transition. So, and these are the people who are making the rules. These are the people who are advising the politicians when it comes to regulations in regarding to the mining industry.
Yeah, that's crazy. That's a very short-sighted and unresearched opinion for her to have had.
There should be regulations. I wouldn't want mining companies to be completely unregulated, but the regulators need to be aware that if we want a modern lifestyle, if we want to keep the electronic industry going, we need to supply them with materials. And you don't construct all these high-tech products out of thin air.
Right, absolutely.
So our next risk is, of course, the technical risk. I mean, like, equipment can break down. Mining companies, they use those huge, huge trucks and excavators, as tall as a building. And this is heavy machinery. If it breaks down, it's very costly to repair. You can also have accidents in mines. You can have, earth sliding or collapsing, and this can shut down the mine sometimes for a very long period of time. So the best mining company in the world can sometimes have disruptions due to equipment failure or due to accidents.
Right. And these are big, expensive pieces of equipment, giant trucks.
Yes. Another risk is the labor risk, the fact that you need a good and experienced team to operate those excavators and those trucks, and you need your workers to be adequately compensated. And if they're not, if they feel disgruntled, if they feel that they're not being compensated enough, then you can have a strike on your hand. And I've already witnessed, a few mining companies which got really hit by a workers' strike, which, it really hurt their bottom line until this labor dispute was resolved. Another risk is what we call community risk. I mean, like the local communities near those mines, they can be concerned for justified reasons that a mine is going to hurt them, hurt the environment, or hurt the community in some other way. And you can have on your hands protests, and you can have legal challenges. And even if the government at that location gave you a permit to mine there, you could still have trouble with the local community. That's another thing that mining companies have to deal with.
That makes sense. The backlash once they start really moving a lot of earth around and getting to work.
And that's, by the way, why many mining companies nowadays, they try to establish good relationships with the local community. For instance, aiding them constructing roads or constructing schools or hospitals, so that the people in the area feel that the mine is benefiting them and not just extracting resources from their ground.
That's a good idea. At least give them a fireworks show or something once a year so they so they don't mind you operating near them.
No, I think it's a great idea that mining companies are aiding local communities, often in very remote places where there's very little infrastructure, and they're giving something in return so that people in the area feel that it goes both ways, that they receive something in return. They should be compensated for allowing large mining companies to operate in their jurisdiction.
Absolutely. And it really could be beneficial for them if they got some long-term benefits out of it.
Yes. Now, another risk that I want to mention is simply the price of oil. Now, as we mentioned, mining operations require those huge trucks, those huge excavators, and they consume a lot of fuel. This is an energy intensive business. And when the price of oil is rising, this can definitely hurt the bottom line of mining companies because they require so much fuel in order to operate their mines.
That makes sense. So right now, with the price of fuel being pretty stable compared to how quickly the value of gold is rising, that they're probably in a pretty good position today.
Yeah, right now the price of oil is not rising considerably. I've heard analysts saying that they project that in the next few years, oil is going to get a lot more expensive. If so, then this could hurt mining companies. But as long as the price of gold and silver is rising faster than the price of oil, then they're fine.
That makes sense.
The worst thing you can be in with the worst situation for a mining company is if the price of gold and silver is falling as the price of oil is rising, then they get squeezed from both
Then,
directions.
yeah, that could be a tough position. That could be a tough situation for them to handle.
So as you're going to see later, we're going to mention there are certain measures for the costs, the cost of operation. So you need to be mindful of those costs in order to understand if the mining industry is going in the right direction or the wrong direction.
Right. You have to look at the total amount they're putting into producing 1 ounce of gold or silver.
Yeah. Now, I also want to mention that mining companies often have problems with funding. In recent years, the prices of gold and silver were very low. As a result, there was very little interest in this industry. Banks were not, willing to lend them a lot of money. There was trouble raising cash in order to start a new mine. As a result, new mines were not developed or they were underdeveloped. But right now, as there is a renewed interest in this industry, I believe that there will be more funding, more capital flowing in the direction of those companies.
Sure, that makes sense.
Now, one of the things that you should be mindful of is it's when a company is having trouble funding itself, it may issue more shares. This is what we call share dilution, and this is not very pleasant. On one hand, you want that company that you're investing in to have funding, but you want the amount of shares that they're issuing to remain constant, so your investment doesn't get diluted.
Right, absolutely.
And
It's something that people find attractive about Bitcoin is that only a limited amount of them will ever be produced.
right. And when it comes to mining companies, nothing assures you that the amount of shares is going to be fixed. On the contrary, when they need to raise more money, they will issue more shares. That means the existing shareholders get diluted, their shares are worth less. And even when the prices of gold and silver are rising, and even when the company is profitable, the prices of the shares can fall simply due to stuff like that, like share dilution.
That's something people should keep in mind at any time. Even if the market's going up, the shares could potentially lose value
Yes,
if
this
they
is
decided
exactly
to dilute them.
another reason why this is a risky business.
Right, absolutely. Making it a lot different than your physical stack that you might have.
Yes, no one can dilute your stack of physical gold and silver. It simply can't happen.
Correct. Yeah, that concern is off the table.
Now, the final risk that I will mention in regards to mining companies is the managerial risk. And like running a mine, it requires experience and it requires knowledge and it requires dedicated managers who know what they're doing. And finding such people is very difficult. And hiring the wrong people can simply bring your mine to failure even if you have a good site, with proven reserves in the ground, if it's being managed poorly, then your mine will fail.
Sure, absolutely.
Yes.
It
So
just like a small business.
yes,
If it's being ran poorly, it could cause that business to fail.
you need good managers to run the operation and bring it from the exploration stage all the way to production.
So now that we know about the risks involved with mining stocks, what is a benefit associated with mining stocks?
Yeah, so after we've listed all this incredibly long list of risks, then you could ask, so why invest in these companies? So the reason why you invest in mining companies is because they offer leverage over the price of the metal, the price either of gold or of silver. The leverage stems from the fact that those companies have operating costs. Now, a number which is often mentioned is what we call the AISC. That's the all-in sustaining cost. And that's pretty much what the company needs to pay or to spend in order to get an ounce of gold or an ounce of silver to the market. And that includes all the costs, including exploration, in order to maintain your reserves. So this is a quick way of knowing, getting a sense of how profitable the company is. For instance, if there is a company with an all-in sustaining cost of $1,500 per ounce of gold, and for instance, let's say that the price of gold is $3,500, so you know that they're making $2,000 per ounce that they're able to get out of the ground.
So if a company, if they're all in sustaining cost, when looking back at September of last year, hasn't moved or has only gone up a percent or two, but gold has gone up 42% in value, they're doing very well right now.
Yes. What we want to see is the price of gold or silver rising as the all-in sustaining cost remaining pretty much the same. Now, I know it is rising on average throughout the industry. That is, that's understandable because due to inflation, costs are constantly rising. But it can also rise due to poor management. So you need to be mindful and look to see if the all-in sustaining cost is reasonable. Now, in my example, I want to show you just how mining companies can leverage the price of gold. For instance, if the price of gold goes up from 3,500 to 4,500, so that's an increase of 28% or so in the price of gold. But if the all-in sustaining cost remains at 1,500, then the miner's profit suddenly jumps to $3,000 an ounce, which is a 50% increase. So divide 50% by 28%, and you get that the miner's earnings rise by 75% more than the price of gold.
I see. So really, the profit margins can be much higher as long as their all-in sustaining cost is low and the metals are rising quickly. Some of these companies are going to be doing very good.
Yeah, now this is especially relevant to companies which are barely profitable, because then the effect can be dramatic. If the price of silver, for instance, was just below your all-in sustaining cost and you were losing money, and suddenly the price of silver jumps and it moves above your all-in sustaining cost, you suddenly become profitable. Then you could see a significant jump in the price of that stock, of that company.
So the smaller the company and the closer they are to the bottom of their profit margin, the more potential they actually have in this situation.
The more leverage they have.
The more leverage they have.
Yes,
Yes.
but also the more risk they entail. And
Absolutely.
it's the larger companies probably won't go bust overnight because they have multiple operations in multiple jurisdictions and they have more experienced managers, but they offer less upside as a result. The smaller companies, which are barely profitable, are almost profitable. They have the highest potential to increase in price. Their share prices can really jump by a factor of 10, for instance. But, there's a lot of risk involved in investing in them. So people should be aware of the risks. And one of the ways to like reduce your risk is by purchasing multiple companies. So don't go all in on any individual company. Spread your risk by investing in multiple ones which you think have a good chance of having good returns.
That makes sense. So you're more likely to nail a 10 bagger with one of these small companies, but it's way less risky to go with one of the big companies that's really well established, hopefully in multiple jurisdictions.
Look, I don't invest in tiny companies. For me, it's just too risky. But there are people who dabble in those tiny, tiny junior miners. Most of them are going to go bust. Perhaps one in 10 is going to grow into a profitable mine. But, sometimes for certain people who are willing to take the risk, sometimes it's worthwhile.
So sometimes it'll pay off, but yeah, that sounds a little too risky for my preference. So you put out some really good charts on X, and I appreciate the way that you can explain what you're seeing in the charts to layman observers. What are the charts telling you about the miners right now? How are they looking right now?
So I use the large mining ETFs as a proxy for the entire sector.
Okay.
And the leading ETF is called the GDX, and it invests in major gold mining companies. And this ETF has just broken out to a new high. Now, just imagine that in 2011, it was trading for between 60 and 65 dollars, and it collapsed in, of course, after 2013 when the price of gold fell. And just now, we managed to set a new all-time high. It took 14 years.
So about the same pace as silver rebounding from that time period.
Yes. Of course, there was a lot of excitement around 2011 when the prices of gold and silver were rallying. They reached that top in 2011. There was a lot of interest in mining companies. And after that, it completely subsided. It absolutely collapsed as the public became more and more interested in tech stocks and just abandoned this sector, then the prices of these companies, they just lingered and just they went into this never-ending bear market. And when an ETF such as the GDX sets a new all-time high, for me, that's an indicator that it is just entering a new bull market. Now, I know that it had to go up a lot. Since the beginning of 2024, it went up a lot. It had to double in price in order to get to where it is right now. And for certain analysts, that means that it's overbought. They're warning that we're going to have a correction. That's always possible. It's always possible that you're going to get a correction, both in the metals themselves and in the mining companies which extract them from the ground. But I still think that breaking out to a new all-time high should bring this to the attention of investors who were not interested, who were not looking at the sector previously. And this could eventually lead to new capital entering this market. And I think that there is potential for these companies to continue setting all-time highs.
That makes sense. And people do get concerned when they see something rising really quickly. They're asking themselves, is this a top? Um, Although it would seem like the miners kind of move with the metals, and it's looking like silver's just getting going. It's going to have a long run from here, and it would seem likely that the miners would do the same thing.
I wanna have a look at another ETF. Another popular ETF is the sister ETF, which is called GDXJ. It supposedly invests in junior gold miners, but in truth, these are mid-sized gold miners
Oh, okay.
in that ETF. So the GDXJ hasn't even reached its all-time high. It's currently traded around $90 and the all-time high is around 180. So it needs to double its price just to get to the 2011 high.
Oh, wow. So that one's lagging behind.
Yeah, of course. You always see the major companies moving first, and then the smaller companies join the rally one by one. This is classic. But what I can say about the GDXJ is that it crossed a major resistance line which connects the tops from 2016 and 2020. And it went through that line pretty easily. It sliced through it, as I say, like a hot knife through butter.
Nice.
So that's another indication that it has potential. I think it has huge potential to advance, to go on. challenge its all-time high, which means doubling in price, and further down the line, perhaps setting new all-time highs. And the fact that it has been so strong of late, I find it to be a good indicator. Now, again, you can always have a correction. It can always pull back, retest that line. Can always have some period of consolidation, particularly if we get weakness in the overall market. But in general, this is a good sign.
So that's a good one to keep an eye on right now, since it just crossed a resistance line. That one might be really moving soon.
Yeah, finally, I wanted to talk about the SILJ. This is another ETF which I'm interested in. This is an ETF which invests in junior silver miners. Again, these are not truly juniors. These are not tiny companies. These are mid-sized companies. Now, the interesting thing about this ETF is that it's been moving sideways in this, pennant formation since its very inception in 2013. And just now it broke out of that pennant. And for me, as an analyst, this is a monumental breakout. I expect it to advance at least by the amplitude of that pennant, which takes it to around $33. That's again a doubling of its price or of the breakout level.
That's great. So SILJ has a lot of potential right now.
Of course, it can always have a correction. It is approaching resistance at its all-time high around $22. We could have a pullback. We could retest the breakout level. Everything is possible. Nothing's going to happen overnight. It's a process, but yes, I do see potential for this ETF.
That's great. Yeah, so nothing's guaranteed, but things are looking relatively promising for SILJ right now.
Yes.
Now, when people are considering an ETF versus individual mining stocks, what kind of stuff should they take into account? And do you have a preference in regards to that?
Yes. So the thing about mining ETFs is that they invest in a large number of companies simultaneously. And this way, they spread the risk. Because even if an individual company within that ETF has very bad results and even goes bankrupt, then it's just a small percentage of the overall ETF. And this way, you are able to reduce your risk. So I prefer investing through those popular mining ETFs. I realize that I'm not going to get the best returns. I'm not going to get the 10 baggers or the 20 baggers, but at least I'm going to be able to capture the average of the entire sector. So less risk, but also less return.
That makes sense. And I do like the sounds of that. So even if one of these companies doesn't do well, it can still get carried by the rest of the companies that the ETF is invested in. And with the individual companies, you got to really know what you're investing in. You have to research these companies well, is what it sounds like. So you either need to commit a lot of time to that, or you're just rolling the dice. You're kind of taking a risk with them.
Yes. In order to invest in individual mining stocks, you really need to know what you're doing. This means either going through their financials and hoping that, everything there is genuine and hoping that everything there is accurate.
Good point.
You also need to know how these reports are constructed, the meaning of all those numbers. It's difficult. You need a lot of knowledge in order to follow all those companies, and there's dozens of them. When you're looking at the juniors, there's dozens and dozens of them. So it takes a lot of work and time to just go through all those financial reports and follow them. That's a full-time job. So many people, what they do, if they really do want to invest in those companies, they follow some kind of a newsletter, some kind of a guru, someone who analyzes those stocks for them and gives them recommendations. But, no one assures that this guru knows what he's talking about. So you need to really be careful. So this is why I recommend for people who are new in this field and don't have a lot of knowledge and don't have a lot of experience, is to stay away from individual mining stocks, particularly the small ones. Stick with the ETFs. you're probably going to get smaller returns, but your degree of risk is much smaller.
Well, that's some great information. Definitely want to keep that in mind. So, how would you say mining stocks perform during a recession? If we do see a recession here in the near future.
Yes. Now, that's a risk that everyone should keep in mind. During a recession, mining stocks don't tend to perform well. Initially, in the initial stages of a recession, usually everything gets sold and gold and silver can get dragged down with the rest of the market. And in that case, of course, as we said, mining stocks, they leverage the price of gold and silver. It works both ways, both on the way up and on the way down. And you can see an absolute collapse in the value of those mining companies. This is what happened in 2008, for instance. You've had a huge correction in the metals during the bursting of the housing bubble. We also saw the same thing happening in 2020 during COVID, another crash in the prices of the metals and mining stocks as well. However, during the Great Depression, for instance, between 1929 and January of 1933, the best performing company, the best performing stock was of Homestake Mining, which was the largest gold producer in the United States at the time. And it shot up an impressive 474%. So
Wow.
yeah, so even during times of crisis, sometimes mining stocks can perform well. And of course, it depends on which analyst you're asking, because I know of analysts who expect mining stocks to absolutely collapse in the next recession. And I know of analysts who say the exact opposite and say that this time it's going to be different. And this time gold and silver are going to rally even through the recession and mining stocks are going to be the place to be. I don't know. I simply don't know. What I do know is that if during a recession the Fed starts easing again and flooding the market with liquidity again, as they usually do during times of crisis, then usually the metals, gold and silver, are the first to recover, and the mining stocks follow them. So even if we do get a complete crash, as long as you're not leveraged, as long as you're holding those stocks outright, I would simply keep them. I wouldn't sell them. I wouldn't panic out of them. I would simply keep them. They may recover. It is likely that their prices will recover even before the rest of the market, before the leading indices. And as inflation takes hold, you could see new highs within the span of a few months or a year. So I can't exactly tell you what to do, but you need to be mindful that the prices of mining stocks, they can collapse during a recession.
Sure, that makes sense. And I mean, a lot of people have been talking about the everything bubble popping. So everything would go down, but it sounds like they do have a high potential to recover better than other assets might. Well, thank you so much for coming on to share your thoughts about mining stocks. It was very informative. Everyone, please check out his links in the description. Thank you for watching today. I appreciate each and every one of you. Don't forget to hit the like button and subscribe to the channel for more content like this. I hope you all have a great day out there, and we will catch you in the next conversation.
Thank you for listening to the Silver Hermit podcast. If you like this content, please donate in the link which appears in the description below. Please subscribe to this channel and share it with your friends and family. Hit the bell icon to be notified whenever I release a new video. Remember, I'm not a licensed financial advisor. This video is intended for general informational purposes only and should not be regarded as investment advice. Before taking any investment decision, please consult with a professional financial advisor who may assess your personal investment objectives and needs.